Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you haven't. Just a little disclaimer, nothing should be construed as financial investment advice. These are just my opinions, thoughts on the markets. Read more below. I'm not a financial advisor, so anyway, let's get into today's market. Looking at initial jobless claims, those were less than expected, but non-farm productivity down 8%, less productive. So this is, I mean, it's not much. The whole market's based on trade, which is nothing, which is, the bear market rally. They think the only reason it's going down, but, the earnings are not doing well. The companies are not doing well quarterly. It's all hype. And just showing more in the economy. This is why this rally won't last. But here it is. I've covered, what's it called? I've covered many of the stories. I talked about Walgreens and everything. But here's another one. Where are Riot Aids closing across the U.S.? What to know about amid bankruptcy. So, see Riot Aid. I believe I covered this before in earlier videos, but so basically, Rite Aid is now slated to begin a process of auctioning off most of its locations. I remember this is commercial real estate. I told about this bubble. There are going to be no bidders, and debt holders are going to get a lot less than they thought. So look at this, preserving jobs, as many associates as possible. So you have to remember, all these bankruptcies, the job loss hasn't occurred yet. I've covered them at nauseum. The thing is, my videos are cumulative, so you can see them. So, and I was looking at this, and no one's more in tuned than Warren Buffett. I'm going to actually try something real quick. So let's find Berkshire Hathaway. Just see what his holdings are. But if you look at him, no one's more in tune with the consumer than Buffett. Now remember what I said, watch what he does. He has a big cash position. He's not buying stocks. He's not buying companies. Let's do financials profile. Maybe they don't have holders because it's not a mutual fund. I thought no, it's interesting. Let's go into this. One of Warren Buffett's latest big bet is souring. Well, yeah, he's betting on America, and oh, this is the other thing about Buffett. 28% of Occidental Petroleum. Buffett's not a good resource investor. He bought ConocoPhillips in 2008 at the very top with $140 oil. Uh, he was bailed out with easy money, cheap money, and the U.S. economy pumping up asset prices. But in the resource sector, it's so boom and bust. It takes a lot of discipline. So that's why he hasn't been able to do it. He did do well on China Natural Petroleum, but if you look at it, his resource game is not, he bought Barrick at the top. I don't see him buying gold minings, but that's the other thing. He bought Barrick Gold and was at the top of 2020. So, but he did see the banking crisis. Now, he never talked about it, never warned about it, maybe be a voice of reason. But yeah, but he's stepping down in 2025. And so I think the bull market ends in 2026. I don't think there'll be a big year this year, as I said. But anyway, let's go back to more. Kellogg's sound the alarm, unexpected shift in consumer behavior. So Kellogg's, they own Fruit Loops, Frosted Flakes, Apple Jacks, and they say consumers are starting to change their minds about breakfast. Now the reality is breakfast is like one of the best meals of the day. The cereals are great, eggs, bacon, waffles. What's that other one? Pancakes. You name it, the pastries. Everyone loves breakfast. Even if during work, like you can do on a day you have off. But look at this. Kellogg's revealed its net organic sales have declined. The reason why people are skipping breakfast is because they're trying to find ways to save money. It's not because people just don't feel breakfast was Kellogg's company's first quarter was lower than expected. And some people are just skipping meals altogether and just eating one. And so look at this, weaker consumer demand. So here it is, Corn Pops, Crispecks, Lucky Charms. People aren't skipping breakfast because they don't like it. They're skipping breakfast because they're trying to save money. And what's one way? Like, let's say you only drink milk for cereal. Well, I just won't drink milk. I won't have cereal. I won't have So here it is. Company cereal face declining sales. Now, healthy cereals are facing a growth, but as you can see, uh, but it says in our category, we're also seeing some consumers are willing to pay more. Some, but that's not most. So, but they're trying to say this is Kellogg's unveils plan to attract consumers. The reality is people are skipping breakfast because they don't have money, and they were like this trend after COVID. People are more picky about the stuff that's in their food. No, the reason why is that's when the inflation that started. That's what happened. The inflation started in 2020. I mean, there's been inflation ever, but so much that, the common person could notice it now. And look at this Texas Roadhouse, they try to put their spin on it, but look at this reported disappointing quarter with, I've heard this before, weather dragging down comparable store sales. And then, giving invest second quarter, early signs of a second quarter, but the reality is, reported disappointing first quarter. That's the truth. Texas Roadhouse is having troubles. Yeah, people can't afford to eat. Kellogg's, I don't buy that whole all natural health brand. People are skipping meals because they are. And this is the other thing. This is why I think this rally is capped. I think, maybe that makes a new high this year, but professional investors are reducing their U.S. stocks exposure. Funding spreads measuring long demand through futures option swaps fell the lowest since August of 2024. So, and here it is, just right here. Average funding spread per contract. You can just see it going down. Which, I mean, I don't know. Professional investors, they generally. Here's the other thing, too. You look at just how bad things are. Krispy Kreme withdraws its 2025 outlook and dividend. So, they're getting rid of their dividend. They're withdrawing their 2025 outlook. This is just everywhere. Stop paying a quarterly dividend. More cautious approach. So there it is, Krispy Kreme. And here's the other thing, just to show how bad Cleveland Cliffs, this is a steel making, plunges after posting quarter one loss, idled six more steel plants. Talk about bringing back manufacturing. We got to produce metals, raw materials, access. Well, our steel companies are not doing poorly. Now, I'll tell you this. Part of my cycles analyst is after this year and the next couple of years, I would say maybe even starting 2030, I think there'll be a 20-year bull market in foreign stocks. And you're starting to see that already. And I'll just show you here. Right here is Trading Economics. The main stock market index in Poland increased 21,433 points. This is 26.93% return since the beginning of 2025, greatly outperforming the US. And I was actually just reading, look at this, Warsaw Stock Exchange benchmark index tops 100,000 for the first time. So there it is. Reflects investor confidence and sustained market growth. Not only that, Poland's stock market is the world's best performing so far this year. I mean, Poland's a beautiful country. I've been there multiple times. I might be living there soon. So, but if you look at it, comprising of all companies, end of the session. The WIG 20, which 20 largest, most liquid companies. Look at this, Donald Tusk. Oh my gosh. Celebrated this on social media. Well, we know with the stock market in America, Trump has nothing to celebrate, so it's gone a bear market rally, but who celebrates bear market rallies? This Polish stock exchange is recording record growth in the strongest market in the world of 2025. And yeah, these are the countries. Eastern Europe will be the best place to live over the next 20 to 30 years. State-owned energy, Orlen. I don't know what it does. Now, I have to be honest. Financial firms. Poland has only had one bank failure in the history, and it was in 2022 during the Russian invasion, where people ran up. Poland has a very sound banking system, believe it or not. So, index launched with just 5 companies, now includes more than 300. So, this is just one country. I love Japan, but I don't know if that's going to be a bull market. But Eastern Europe in general. So, yeah, if you look at this, I've been to this store, Zapka convenience store. It's actually very good. It's not like 7-Eleven in America. It's actually very good. So, anyway, that's all I say. Like that's the other thing is the BRICS. Last decade, Brazil was a big winner, and maybe they're a big winner again starting in 2030. But I mean, I like Eastern Europe. I think it should be. That's where I'll probably invest some of my money after this sort of crash in the 20s. Don't worry, I think all markets are going to sort of go in for it. But U.S. stocks, that bull market's over. Maybe it'll come back again. I think it will once the S&P gets down to around 2,000 or 38 or 3,500. But anyway, that's all. Remember, disclaimer, not financial investment advice. I'm not a financial advisor. Read more below and do your own research. So anyway, hit that like button, subscribe. I'll see you next video.